in terms of, I mean, taking a step back and looking at, okay, what are they really looking for? And this may sound common sense, but I'll double click on this because this helps us think like them, relate to them, and then also start looking at what milestones we need to be ready, right? So one is, I mean, they're investors, so they're looking for very high growth. Again, this slide may seem very common sense, but if we start thinking about each one of them and double clicking, it gives you a clue into how they think and what kind of progress you need to make, before you are ready. So they're seeking high returns, yet they're trying to lower their risk. And these are, not always, sometimes they could be somewhat mutually exclusive, but not always, right? So that's what they're looking for. Now, double clicking that, how do you actually, what makes them feel like, okay, this is a very high growth deal, right? Or high growth venture. One is large market, very high growth market, lower market penetration, as we talked before, unmet need. So nobody's solving. Maybe people are using some ancient technology, and technology is a kind of a wrong word here, but ancient way of doing things, right? Or alternatives they're using to somehow get to the end. They also look at team's track record. Have they done something scalable before, right? Have they scaled businesses before? And they're really looking for explosive growth potential. So if you have a good lifestyle business which makes $10 million revenue, are likely to make $10 million revenue in 5 years, that is not very interesting. And even if everything else is proven on that model, that is not very interesting because it's like somebody telling you, why don't you put your money into the money market account in US Bank, which gives you very minuscule returns when you have other investment vehicles possible, right? So they're really looking for something that is just going to disrupt disrupt your business model, disruptive technology, combination of both, and something that can become, in US, we call it a home run, right? They're not looking for singles and doubles. They're looking for home runs in every deal they get into, right? And not all of them turn into, home runs, but the expectation going in is it will turn into home run, right? So that's the high growth part. Now, the low risk part, obviously, they really would like to see the product market fit. They like to see product readiness. So if you're just going with, concept or maybe even a prototype, there is significantly higher risk, right? Because a lot of stuff is not proven. Product market fit is not proven. You don't have a real product. That means some amount of capital and time both will get burned until you build a product. And again, who knows if that product is going to be really meeting the need, even though you may have some early validation that it might, right? And so the further along you are, when you say, okay, instead of just a PowerPoint, I have some prototype and I tested with few hundred users, that's better, right? But then when you say I have now a beta product I built and it's a real product, and again I tested that with hundreds of users, that gets slightly better, right? Or significantly better, I would say. Then if you say, okay, we went through the beta, again, I'm using software product terminology, but it applies to any business. Then if you say, okay, I went through all of that, now I have a live product, and I have a good number of customers using, right? That's actually positive. And these customers are, sort of promoting or saying good things about your product. Those are all good. And then you go back and say, okay, I have talked to now a bunch of users and customers, and they're willing to pay this much, right? That gets better, right? And again, I'm going step by step. At one point, you might come back and say, yeah, we have now revenue, and this is how people are paying, this is how we expect that to kind of scale. So the revenue validation they are looking for, business model validation they're looking for, and they are also looking for, what you build. Is there a sustainable differentiator? where it would allow you to kind of defend your turf, at least for a while, at least maybe about 9, 10, 12 months, so that you have a runway to take off if they give you capital before a large competitor kind of comes in and kind of leave you at a situation where you don't have a critical mass. Because before such an event occurs, you have to be at a critical mass where you have significant number of customers and significant number of significant level of revenue, because that itself becomes somewhat of a barrier for the other player to come in. So this is how they look for different milestones, because each milestone you are further along is reducing their risk, right? And that's the key element. That's reducing their risk. So again, make sure you think about this, when you do your pitch, and make sure you are not underselling or under communicating the progress you have made, in terms of validations.